Good evening, everyone, and welcome to this week's live weekly trade plan. Now, my name's Tim, and I'm more than happy to take you through tonight's webinar. Sorry, I'm just looking at people entering the room, and it looks like there's just a couple of people coming through now. Good evening, everyone. You're all very, very welcome indeed. It's good to have you on board yet again. So this is a live webinar, which is all about effectively multi-time frame analysis. Now, we are having this live weekly trade plan outside of market hours. Now, that's just quite important for us to take stock of what is happening to price, and it enables us to plan for the week ahead in terms of looking for opportunities, identifying when the markets act and behave around these kinds of levels, and we're able to plan accordingly from there. So, as usual, we'll be taking a look at our we'll be taking a technical look at weekly and monthly timeframes, and we'll be able to identify the important highs and lows and genuine levels of support resistance that we can trade. Hopefully we can utilize that information in the week ahead. So as always, we'll be looking at our 15 liquid global markets, plus any other markets perhaps you'd like us to look at towards the end of the webinar. Okay, so just before we get into the charts, if we can start as we always do with our risk warning. I'm sure you're well used to it by now, but it's just very important that you as a trader are familiar with the risks involved in trading financial markets. It's not an easy pursuit by any stretch of the imagination. So please do take on board the risks that are involved. Now, we'll have a look at multi-time frame analysis. We've identified a number of reasons why that's particularly important, and not just on a daily time frame, but on any particular time frame that you decide to use in order to trade these markets. One very important reason is that you can see more clearly what's happening and who's genuinely in control of each market. So don't forget, the financial markets, or whatever market you're looking at, it's a battlefield between buyers and sellers. They're competing with each other, and it's up to us to identify, perhaps when we get into those markets, who's in control, and therefore try to make some fairly logical and straightforward decisions as a result. The larger the time frame as well, the more important the genuine level of support resistance becomes. So that's quite important. If we're looking at daily levels, yes, they are of importance. If we're approaching weekly or monthly levels, they add a higher degree of significance to that. It can also show you the important levels where a market is likely to move towards as well. So quite often, if you get weekly and monthly major levels of support resistance, it is very likely to provide a bit of resistance around those levels. So it can be used for take profit as well, and can assist with identification of trend reversals as well. Okay, so that's what multi-time frame is all about. So let's get straight into the charts, and we'll see what is going on there. So just bear with me. Let me bring this up. So let's start with the dollar index, as we always do. As you can see, the price action is it's quite messy. There was a bit of sort of positive sentiment regarding the dollar there for I suppose about a week, and then last week a lot of that sentiment collapsed significantly. So we had the initial move to the upside. We had a bounce off, which became last week our weekly highs, and we've had a bit of a reversal. And as you can see, what's quite interesting is the weekly lows. So from a price perspective, there's one of two potential opportunities. We are identifying this level now as a significant level of potential support. So when you get these significant levels, you've got two options. You either look to sell the break of this level, or there's an argument to suggest you'd be looking for opportunities to buy off this level. Now, in terms of the likelihood of a positive outcome, there's kind of pros and cons to both approaches. Now, historically and also numerically, a break of this high is actually the safer trade to take. You'd have a higher probability of a profitable trade at that level. Now that's over a number of years. You will get to learn and to experience that. It's never over one or two individual trades, which can obviously, the markets can go either kind of direction. Now, a trade from these kinds of lows pushing up to 90.43 is very much a viable trade. You've got to weigh up the pros and cons with regards to support and resistance. Now, this could very well be the beginning of, if we get some continued dollar strength, and I do want to emphasize caution really with this US dollar, because we know what's been happening for a year and a half now, or a year and a quarter, let's say, is that the market is moving lower. And every time it pushes higher, it just gets slammed. And we've seen that again. But what this could signify really now is a significant double bottom. So let's see what happens. There's every likelihood to look at this price action in here and suggest, well, actually, we might get similar sort of price action there where the market just moves sideways before it starts to grade higher. Now, like I said, we're looking at this low here for a break to the downside. If that's the case, we would absolutely expect continuation, and it's very likely that is to happen, bearing in mind previous price action is looking for every opportunity to keep pushing this market lower. So we're in that phase at the moment where we need to see a little bit more information before we can categorically make some trading decisions. It'd be fascinating to see tomorrow's price action. Now, those are the two potential options that we see on a daily time frame. So let's go in and we'll see the weekly. So you can see how, if I zoom in for you in a little bit more detail, hopefully you can see that in more detail there. So you can see how these weekly highs and lows can stack up, where they become multiple levels of resistance, preventing prices pushing higher, and also multiple levels of support, preventing prices from pushing lower. So, and that's why we have this weekly session, is just to identify these levels and to suggest that, if this market starts to roll around and we get that break above the 90.43, it actually constitutes not just an interesting trade from a daily perspective, but also from a bigger time frame, which would mean more of the market in terms of capital would see that move and are likely to jump in with that particular, if you can get this to look like a structural failure, and I can't see any one since March 2017. So they don't happen that often. And prior to, again, a year earlier, we saw this downward move and we saw a structural failure pushing to the upside with a lot of volatility. So they don't happen very often. But when they do, you're very likely to see price moving in that direction for a particular period of time. And that's where the trading skill starts to come in. Okay, so those are the levels. So the only level we're really going to change, and just to see kind of what we're facing with this, is a very, very bearish market. Sentiment is very bearish, and the opportunity for this market to push higher gets sold off pretty quickly. So that's the environment. That's the market conditions. So if you take a buy trade, then and if you can mitigate risk sooner rather than later, then please do it. We were in the dollar CAD trade there last week, and the market was behaving in a way in which we weren't particularly comfortable with. So instead of hanging around and waiting for price action to see itself out, we decided to just cut it for, I think, a 16 or an 18 pound loser. We just didn't want to hang around in that, irrespective of whether that market strengthens or weakens. It's a decision that's made to just make sure that if we take losses, we try and keep the losses as low as possible, and give ourselves every opportunities when those markets do start to open up. And and it's just about patience with those kinds of moves, because that's really what's needed. As you can see on a monthly time frame, we are 18 days into the month, and there is significant indecision as well. So we've had 3 very, very bearish months. And this is a month now which is just showing a little bit of hesitation. So what we really would like to see that the sellers take complete control over this, break these lows, and start driving this market lower, which would be the 4th consecutive bearish month in the dollar. If that doesn't happen, then it opens the door for buyers to actually enter this market, and maybe we start to see a little bit of price be driven to the upside. So what I'm going to do is just take, so that's the information behind the US dollar, and you'll see how this plays out across many of the other markets, dollar markets that we look at. So I'm going to take note of the low, the 88.13 level. So I'll just change this low ever so slightly. So there we go. So that's the high, and you can now see it's a multiple. It's a 4-week high and it's a 4-week low now. So again, it just gives us an important level to work with. So the same can be applied for, this is obviously an inverted look of the, this is the euro dollar, and it's the same picture, just upside down. So with that in mind, I'm just going to take note of the high. Now, what's interesting with this is a bit more of kind of a bearish engulfing candlestick as well. So we're very likely to see continuation. If we break last Friday's lows, we're very inclined to see some continuation pushing lower. From a trading perspective, a clear-cut rejection to the upside now, actually, which is very, very interesting. It puts that extra degree of doubt to the upside. So if you're buying this market now and you see this candlestick, you wouldn't be overly happy, at this particular point in time. But look, if I go back to there was a candlestick here. I mean, it's not quite the same because this is kind of a very clearly defined double top at a price level which is around the 2,500 level. So it's quite a different situation. But there was kind of a bit of a rejection around the $23 level, 123, and bit of a rejection. And then the market opened up the next day. We didn't get a break of that daily low, which is really the first port of call with this market. We want to see that price break below 23.92. If that's the case, we're very likely to see continuation. So as you can see, this market sold off on that particular occasion as well. The next day, we failed to break the low, just looking in this candlestick in here, and this market decided to shoot up quite considerably higher over the next few days. So I don't think that's going to happen in this particular market. We're clearly seeing kind of a double top price action. So let's see how symmetrical it becomes. If it becomes kind of it could develop into a head and shoulder price action, which all it says to us is we just need to be a little bit patient just for the short term and see what opportunities it may bring. So we'll work with the high, which is the 25.54. So I'm just going to move this up ever so slightly. 25.54, I think I said. Yeah, there we go. And we can work with the weekly lows as well. The same situation applies, although as you can see, the pound wasn't strong enough to sort of be pushing up to the 43 level. So it's slightly weaker than the euro. The euro was quite strong against the dollar. The pound not so strong. And we got a bit of this again. If we get a break and just notice the low of the 2 days, which is the 37.99 and the 37.95. So there's a pip and a half difference between the two lows. So that should be made note of. And if we get a break of those to the downside, we're very likely to see continuation pushing lower. Okay, let me see. Can you guys hear me okay? Got one or two notes to suggest that you're having some issues getting access. It's all good, Richard. Okay, great. All right, thanks, Rob. Great. Cheers, Mark. Yeah, quite a few others you are actually saying everything seems fine. Okay, not sure what the issue is then. Maybe it's more of a local issue on your side, perhaps. Maybe reboot. We don't have any significant problems with Demio or anything like that. So everyone else seems to be okay. So it must be a local issue. Maybe even check your own internet connection. Perhaps that might be a reason for it. Okay, then moving on. So we're actually going to continue to work with these daily highs and daily lows. If we just have a look at the bigger picture, you know, this wouldn't fill you with that much confidence if you are buying and expecting this market to break above 43.43. I do appreciate things can change very quickly. If we get a break above, and this is now the weekly highs, so 41.49, and last week's high was 41.43. So again, a 6 pip difference. And if you can imagine, the amount of capital and volume in these markets are in their multi-billion pound. For these markets to stop, you know, and we're talking about within 6 pips from each other, is virtually the same price. So, you know, don't fight over necessarily even 20, 30 pips for that matter. You know, it can effectively be roughly the same sort of price. And that's why when people ask us about genuine levels of support and resistance, you need to identify the general area. So the actual price itself, you know, you can even have a genuine level of support resistance with just, you know, a price breaking 5 or 10 pips above or below. And in actual fact, it's for all intents and purposes, it's the same price, just because of the size and the volume of those moves. And some of these markets sell very, very quickly, and then they pull back and bounce off those levels. But they might go 10 pips or 15 or 20 pips over that level before reversing. So so do bear that in mind. Okay, so that's the pound dollar then on a weekly time frame. So we're going to continue to work with the highs. Now, as much as you wouldn't be in favor of necessarily buying this market unless we probably clear that level, if we go to the monthly time frame, you can now see you wouldn't be a big fan of selling this market either. So what does that tell us? You know, to try and be patient and to just let this price action sort itself out. And we often use the phrase, if in doubt, stay out. And that can really, really bode well as well for all traders that, you know, if you get price action like this, where weekly it's, you know, you wouldn't be a fan of buying it, and then you look at this and now you're not really a fan of selling it either. All it's saying to you is now's not the time to be jumping into this market. So hopefully you can arrive at a fairly logical conclusion. The dollar yen, you know, the dollar's really benefited from the selling off we've seen in the indices. You know, the sort of the fear and the anxiety that kicks in to some of those markets, not so much over the last week, but prior to that, we all know that the stock markets took a bit of a pounding, and well, some call it a pounding, some call it just a natural kind of a natural what's the word I'm looking for? Pullback, you know, for all intents and purposes. So just an oh, excuse me, sorry, it's been a long weekend, I'm afraid, but yeah, so just a natural pullback in some of those global stock markets, and because the yen is a flight to safety currency, so it can benefit from a lot of fear and anxiety in markets, and that's been responsible for the funds coming in. Plus the dollar had been selling off excessively, but as you can see, predominantly more against the yen than many of its other counterparts as well. So this would be another example. You know, compare the strength of the yen against the CAD. You know, we're roughly at the lows of the beginning of the week, whereas you couldn't say that about the yen. So that just explains and shows to you the difference in the volatility of those markets. So going back, so we've broken beneath the low. This was an interesting trade for us at the time because it's a no-brainer sell, but we were in two dollar-related trades at the time, with every scope that those could move into positions of profit, and we would have liked to have capitalized on this particular break, but we decided that the timing wasn't particularly great, bearing in mind some of the trades that we were currently in, because if we decided to take this trade, then it would have meant we would have hedged one of the trades that we've taken, and in hindsight that wouldn't have been a bad decision, but the difficulty is making those decisions ahead of time. So we don't regret any of the decisions we've made. You know, we got into the dollar in the expectation the dollar was going to do X, Y, and Z, and it failed to perform. So we wanted to cut those trades, you know, fairly quickly, very, very seamlessly as well. And that's just the approach that has brought us most success over the years. So the weekly level, a very clearly defined break pushing lower. So we're just going to, and just show you the monthly chart as well. So a break beneath the monthly low, or the weekly low, should I say, would see continuation pushing down, maybe even as far as, I do want to just take note of these lows over here and just see what is happening around those kinds of levels. So you could see that these levels, you know, are significant to the upside and to the downside. And I just want to change this line to green. So, sorry, to blue, should I say. So we'll change that in there. So there's every scope that if we get a break of 105.53, that we get a push down to 101. So, you know, we're seeing continued weakness there in the dollar yet again. Okay, so so with that in mind, let's go back to the weekly and let's zoom in as tight as we can, and we'll work with the new high and lows of this market. So the high is the 108.80. So let's change this level. So this is the 108.80 level. That's the high to the upside, and sorry, let me take a note of this level to the downside. So 105.53, and it's exactly in line with our low, which is 105.53 as well. So I'll put the 105.53 in there. So that's quite an interesting level. The dollar CAD, we're still contained within these highs and these lows. So we just kind of want this market to reveal itself before we decide what to do. You can see we've got kind of a spinning top with a slight bearish tint to it. So really this market could actually turn around and start making new highs, or it could equally start pushing down to previous lows as well. On a monthly time frame, maybe the basis for a bit of support and price action. However, you want to see fairly shortly that the dollar strengthen against the CAD, and see if we can certainly break above last month's high, which is the 25.75 approximately. So you want to see this price push over above that if you're going to see continuation in this market. Okay, so that is the dollar CAD. Moving on to the yen. This is again, it's benefited from, you know, a lot of the moves in the global stock markets. So we were working with the previous highs. You can see what's happened for the last 5 days. A little bit of rejection to the downside, but then Friday's candlestick finished, you know, quite strong, as you can see in there. And we are at sort of last week's low for all intents and purposes. So the low of last week was 131.97, and the close of this market is 131.91. So again, it's virtually the same price, 6 pips difference. And we just want to see if we get continuation in this market now. So looking at the weekly, you'd have to suggest that we've already broken the ascending line, which was literally a level or a line that we've been sort of monitoring for since back in the summer, really, we've seen this price action just bounce off that level and respect it before we got the confirmed break of that level. Even back here, where you got the rejection off the 132.94, and now we're getting continuation to push lower. So we're just going to monitor this level. So what I'm going to do is work with the highs and the lows. So the high is 133.77. So now we can use a new high on this market, 133.77. And the low, we've got a new low in this market as well. So it's the 131.59. 131.59. So those are the levels in there for the euro yen. So the euro pound. Let me zoom out so you can see what's going on. We've been in this period of consolidation for quite some time. Yes, it can present some opportunities. The nature of those opportunities are often fairly thin. We're seeing a bit of downward price action pushing these markets lower. We get quite consistent moves lower off these levels, and we can see that that's probably likely to happen again. So we're probably looking to get a squeeze in this market to push it lower. It's just sort of too tight for kind of the purposes in which we want to trade it. But it's not to say that a trade doesn't exist. It potentially does. Don't forget as well, there's a lot of political risk associated with the euro pound trade at the moment, with all the negotiations going on regarding the Brexit discussions and situations. So this market can swing, for and against you, really. Okay, so we're going to work with these levels. So price action just needs to work for us, and we just need to be patient, because when you do get a break of these prolonged periods of consolidation, you can normally get really interesting moves off those. Okay, the S&P. We're still working off last week's highs and lows, and it's not just this market, but this is very, very close to last week's high. That's quite telling. Same again in the Dow Jones. The FTSE is a little bit off, as you can see, last week's high, but not a huge amount. And then the NASDAQ as well, which kind of broke through it, and as you can see, has clearly reversed a little bit off that level. So again, that just shows you the importance of these levels. And if we work with that, a 2-week sell-off followed by 1 week of buying, so that's the initial reaction. Now, the key question is, what are we going to see next? Are we going to see just a 2-week correction followed by extended highs and pushing up to these levels? Very, very possible. Nothing surprises us at all. And are we going to get one of the biggest rejection candlesticks probably ever? Again, very, very possible. So you'd have to say, looking at that, you wouldn't necessarily be a fan at this point of looking to sell it. So let's see if we get continuation and a break above those levels. So for now, we're going to continue to work with the 27.62 to the upside and the 25.29, although it's quite far away. And they might present us with other opportunities to sell this market within this level if we get the price action. But it is still a weekly low that we can work with. Okay, so the same really applies for the Dow Jones. We're going to be looking at all these markets very, very closely. The FTSE's a little bit off the highs, but we're not talking about an awful lot. So we'll continue to work with those levels as well. Just note the potential for a bit of resistance around this level if we do get a bit of a push down to the downside. So we're watching it closely. Although this was one of the trades that we decided to get into on the daily time frame. We really quite liked the S&P 500. We're a little bit too concerned with perhaps other issues in other markets that were creating a bit of doubt in our mind. But the FTSE was a trade that we were happy to get into, and it's squeezing higher. So we just want to see this market tomorrow break above 72, 76. But we're going to work with those levels for now. So the only level that really needs to change is the high in the NASDAQ. So the 68.27. So let's change that level. 68.27. Excuse me, I got that completely wrong. So 68.59. So 68.59. So there we go. That's a new weekly high in this market. Regarding gold, so this has been sort of reacting to the dollar move. As you can see, we've got a double bottom in the dollar index and also in the dollar, in euro dollar. And this is a similar bit of price action. You can see that the market failed to break above these levels. Or sorry, should I say, failed to hold on to a break above these levels and has since reversed. So what we will do is work with these new high levels. So the low is still intact. We'll work, just for consistency purposes, we'll work with the new high. So 1365.89. So 1365.89. So that is the new high for all intents and purposes in the gold market. And let's see how this we're watching this very, very closely as well as the euro dollar and the dollar index. Crude oil is another market that we decided to trade the double bottom or the W formation or the structural failure, which was the level in which we decided to get in. Friday's market came back to the previous high and finished slightly positive. So we just want to see this market, push up closer to these top levels, at which point we might look to be taking profit on this trade around that level. So far so good. Things could change very quickly. We could get this massive rollover to the downside. We know how precarious this particular market is, but we wanted to let the sell trade just do its thing, find its natural home, and then look to buy at a lower price. So that was our strategy. That was our approach to the crude oil markets. And so far so good on this trade. So let's just see if we get that little leg higher over the next few days. And then the last market now is the 10-year Treasury note. So we're seeing this market roll over to the downside on Wednesday, make new lows. We actually got in beneath that level and has just sort of subsequently pulled back. To just give you sort of the weekly and the monthly view as well, very, very bearish with plenty scope to the downside, which is why we're looking for opportunities to sell this, and we probably will be doing so for maybe the majority of the year. Who knows, unless something structural changes. So on a weekly time frame, we're relatively happy. We have our stop loss above the weekly high. I'll zoom in so you can see it in a bit more detail. We've got a stop loss above the weekly high. We've got a bearish candlestick. The only thing that's uncomfortable is the close. It's at last week's low, so you'd like it to push and squeeze a bit lower, but there's plenty of opportunity for this market to do so. And let's see what the next step is in this market. So in terms of highs and lows, we're going to work with the highs and lows of last week's candlestick. So the high is 121.20. I'll just change this one. 121.20, and the low is it's the 120 level. So I'll just change this one here. So we got new highs and new lows there in the 10-year note. Okay, that just about wraps it up for the evening then, guys. Just to finish the actual presentation, you're very welcome to follow us on Facebook. The details are there up on screen. Feel free to contact us as well if you do have any questions about anything that we've covered. We're happy to go through these things with you, just to make sure that you're clear about perhaps decision making. So you can just email us at support@TheLiveTradeRoom.com. And if you do have any questions now, guys, feel free to post them into your chat box. If not, I appreciate you're very welcome to shoot off. Apologies for one or two of you who seem to have had a couple of technical issues, but everyone else seems to have been okay. So hopefully it was just a couple of issues on your end. Everything seems to be fine on our end. So just looking through, my pleasure, guys. Thank you very much. If you do have any questions, or even if you have any markets that you'd like us to look at, then do let me know, and I'll be happy to look at that for you. Okay, great stuff, guys. Thank you very much. Great to have you on board, as always. Let me see. Okay, so it doesn't look like there's any markets coming through or any specific questions, which I can only hope is a good thing. Hopefully we've made it as clear as we possibly can. Thanks so much, Pete. We'll see you during the week. So on that note, guys, I'm quite happy to wrap it up. If something does come back online, I'm quite happy to come back on and have a look at things. So I'll let the majority of you guys go. Thanks very much for joining us. This webinar has been recorded and will be placed into your members login area normally within the next hour or two. So on that note, hopefully you can join us for the week during the live trade room, and we look forward to seeing you all during the week, and obviously again next week. So from everyone here, do take care and bye for now.